Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
How's it going out there? It's February 27th. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. Man, what a week. So a security token offering, which is Curzio Equity Owners. Proud to say that we hit our $3 million soft cap. And we hit that soft cap in about 8 trading days. So what does that mean? It means our CEO token is a go. And I won't curse here, but it's going to get real now because there's no turning back. It's a go. We raised $3 million. That was the amount that was the minimum. So if we didn't raise $3 million, I would give the investors money back and say, let's not do a security token offering or whatever, because in order for us to do this, we're going all in. And I love it, and it's great. And the security token market, guys, I talked to you about it. It's unbelievable. The fact that we hit our soft cap in just 8 trading days is incredible. I want to thank you because that's the private sale with our investors. So our next step now is to go to the exchanges like Open Finance, Coinbase, T0 to try to get our token listed on those exchanges once it goes free trading 12 months after we close the offering. Again, we're closing the private offering, which is just available to you. And I couldn't go to places like this or even, Coinbase or anything like that. Again, Coinbase, in terms of security tokens, they're going to be trading those on their platform pretty soon, I believe. But we couldn't go to them because we wanted to hit our soft cap first. And now that it's real and it's going to come out and this token is a go, now we're going to actually talk to them and sit down and bring our offering to these guys. So the entire crypto community, which is the next step of this, which, we're looking to raise $12 million. It's really exciting. I have meetings set up. I'm leaving after this to go to New York City to talk to investors for about a day. I think it's a full day trip, going Thursday, coming home late Friday. And again, the private offering does end tomorrow, which is Thursday. But now it's the next step of this. And why am I going to these platforms? Why is we want to create liquidity for you, which is going to be awesome. And more important, I believe we're going to see a lot of these people invest. I've had like major endorsements. So you have your list of people and everybody's cool. I had like 2 guys who like really fundamental analysts who just only buy stuff. Like they'll only buy Amazon if it was like $2, right? I'm not touching it. I got to see more value. And they both invested in our token, which I was really honored. These are guys that question everything and go through every single detail and ask a lot of questions and look at our valuation and everything, fundamentals. And to me, it was just a validation that our deal is structured right. It's an investor-friendly deal. And I think once we bring it to this crypto community, again, maybe it might not happen, but I think it will because I've seen some of the things that they invested in, and it's not even close to the deal that we're offering them. And it's a really cool deal. You get an equity stake. We intend on paying a dividend. I'd say intend. You can have access to all of our products. And more important is it's structured almost perfectly to the point where every one of our investors right now, and I talked to so many of them, which is great. I mean, it's just brilliant to really talk to the people. And this is even after they invested. It wasn't like, me commit. They just had some questions. And listen, we're an open book. We want to make sure you know exactly what you're invested. I'll get to that in a minute. But when I say structured right is every one of our investors had to go through a KYC, which is Know Your Customer, AML, anti-money laundering, and also had to actually prove that they're a credit investor. Now, why do we do that? And we try to make that process as smooth as possible. And we got a lot of compliments. And we use a securitized platform, which made everything a DocuSign, made it very easy, created guides of how to invest. But the reason why we're taking those steps, because those are the requirements. Those are the requirements to trade this token on an SEC-regulated exchange. So if we go, any ICO right now, it's a utility token, can't go to these exchanges and trade. Most of them didn't go through the KYC, AML checks. Most of them are not accredited investors. They didn't open it to accredited investors. So it has to be structured at the beginning. And that was one of the biggest things for me, which is the process where we wanted to probably launch this a month and a half ago. But I wanted to make sure I'm looking beyond just raising money. It's not just, hey, raise money. Okay, cool. No. For me, I have to make sure this token works. Everything, it checked every single box. Like, how do we get it on these major exchanges? And the fact that all of us are trading, all of us are KYC, AML compliant, proving that we're accredited investors is going to, that's the first thing they're going to ask. And the fact that we work with Securitize and Securitize is partner with a lot of these people, they're going to say, hey, here's all the data, here it is. And what does that mean? Because people think it's, what crypto, Bitcoin's all over the place. What the 4,000s back there. Don't think that it's not, that's crypto. This is different. All right, this is totally different where we know every one of our customers. If you lose your tokens or send them to the wrong address in an ICO, if it's an altcoin or a utility token, it could be gone forever. With us, we know everybody, even the people who are going to register on these exchanges. They're going to know every one of them. If you go to T0 right now, they only have their token trading. If you go to T0 right now, you have to show that you're a credit investor. You have to show proof of all this stuff, and they go through the KYC, AML stuff. When you fill out forms. All this gets approved. That means anyone who's buying the tokens, we know, just like if it was a shareholder or how many shareholders people have. And if you lose those tokens, we can actually burn them and create more for you. So these security exchanges are going to be insured, again, SEC regulated. So that's the next generation of this. And for me, I wanted to make sure we are 100% compliant when we go there, because that's the point of this. It's not going to work if we don't have that. Again, we could guarantee liquidity through companies like Bancorp because we went through Securitize. But at the end of the day, we want to trade in these exchanges. And you might say, oh, Frank, T0 has one company trading on their exchange. There's tons of STOs now coming out. And a lot of these things are going to get listed. You're going to see over the next 6 months, over the next year, and going forward, it's going to get bigger and bigger and bigger and bigger. And the fact that we're first to the party is pretty cool. It's nervous, right? I tell you all the time, and I joke around and say, being first to the party, Alta Vista was first to the party. Hey, BlackBerry was first to the party, did well. Then Apple just ate their lunch, and they had to change their whole business model. They're making components or technology for cars right now. But and actually, they're releasing a new iPhone with the keyboard on it. Not the iPhone, but the new BlackBerry with a keyboard on it, which is weird. So I don't know. Maybe they're going to bring it back. And again, good timing with Apple failing. Anyway, don't want to get off point. So just really exciting stuff now that this token is a launch. And thank you so much for supporting us. And remember, the first 2 weeks of our offering, that was the private sale. I promise you that it was only going to be available to you, which is listeners, subscribers, followers. I offer a 10% discount for all of you. So accredited investors who participate in the offering, it's going to give you that equity stake Curzio research. Instead of buying the token at $5, you're going to be able to purchase it at $4.50. If you're not accredited, there's going to go free trading in 12 months, after offering closes. It's 12 months after the offering closes. So we're raising money for another 6 weeks, and we're hoping to get this finished before that. That's the goal. But again, I'm not too sure if it will happen. If I had a guess based on what I'm hearing in calls and the meetings I'm getting into, people are very interested. I love sitting down and explaining every single detail to them. And so far, most of the people I've done that to have invested in it, and they're excited because they're just learning about the fundamentals of the financial newsletter business and realizing this is one of the greatest businesses on earth that so many people never had access to because most of the companies here are private. And when we really tell them our model, which some of it we don't, we go over a lot in our white paper, but we don't go over every single number and everything, right? We don't want to just, it's like playing cards and show everyone our hands and our competitors. And then when I really talk to these people in detail and say, this is what we're looking to do. And hey, we can go into recession for 5-6 years. People don't buy newsletters. I highlight the risks and stuff like that. But when they actually see the model, what we're doing, we're not taking this money to just hire a million people and just Super Bowl commercial. It's very calculated. I mean, we're looking to cut costs as we're raising money still. So this is a 5-year plan that we plan to initiate. We know how this business is run. We've seen businesses go from where we are right now, which is $6 million in sales over the past 2 years, to $50, $100, $150 million businesses. We've seen it happen. We know the formula, but it's not an exact comparison where we want to take the good stuff and then add a lot of stuff that we have to bring to the table, like our podcast, like people seeing us in the field, having, I want to say, some of the most original content out there where we're writing about stuff that I don't see people in the industry writing for years later. Because I have you. I have an amazing network of people. This podcast is getting hundreds of thousands of downloads now per month. And it's not just interviewing guys like Dennis Higgs. We're about to interview in a little while. It's having everyone out there listening to this podcast, being able to have this massive network and getting into ideas early. I mean, that's what it's about. And I think that's a huge advantage we have. And as a smaller business, you want to look at the advantages you have over your big competitors, and you want to just go all in on those. And that's what we're doing. And we're really excited. So with that said, the $3 million we raised so far, if you're not an accredited investor, again, this is for you. We're looking to build the company. You're going to be able to trade this token 12 months from now. Now it's time for us to go outside to list to try to get it to $12 million. But the private sale will end on Thursday, guys. So it's going to end. Now, saying this up front, invest not for anyone. But if you are thinking of coming in or you're excited about it or whatever, you just try to do it before the February 28th, which is tomorrow. At least, fill out the paperwork so, you could get locked in. Because after that date, we can't promise that you can get in. We can't promise that you're going to get a discount. So if we go to these funds and someone decides to hand us, 2 or 3 of them decide to hand us a check and say, we'll take the whole thing, it's over. So I just wanted to make that clear to you. I know most of you already invested and we're exciting it, but if you're thinking about, if you're away on vacation or whatever, just send me a note, send me an email, or you can just go to the website, CurzioEquityOwners.com. It's going to tell you exactly what to do and how to register and stuff like that. And again, if you're interested, if not, again, it's not for everybody, but be sure you read everything. Our white paper, safe agreement. We created an FAQ page for everyone. It probably will answer 95% of the questions you have. So, if there's a question that is not in there, we've gotten questions. Hey, Frank, could you go a little fundamentals of the business model a little bit more? I've talked to dozens of investors so far. I've gotten on the phone with them. That's my job. If you're going to invest, our minimum is $25,000. You're a partner. That's what you do when you're a partner. Some people that might not be a lot of money for, other people that's a fortune for. To me, it's a lot of money. So if you're going to invest in our company, you need to know every single detail. So that's why we encourage you to read anything, ask questions. You better ask questions. Hopefully that's what you got from me. You've listened to my podcast for so long, right? Be sure to do your due diligence, question everything, do the homework. If something doesn't seem right, then it usually isn't. So, you got to follow that advice that I've been giving to everyone for the last 25 years, even with my deal. But if you're interested, because again, it's only available as private sale to you guys for the next couple of days. But if you're interested, just go to our website at www.CurzioEquityOwners.com. So, and over the past few podcasts, past few weeks, maybe a little bit over a month, the theme has been our security token offering. I know a lot of you understand that because by raising money, it's going to allow us to grow our business, grow our brand, publish more newsletters, bring on some great analysts and editors. A lot of those guys that you heard me interview on this podcast, Wall Street Unplugged, create more educational content that's going to help you guys become better investors. That's what we're doing here. But at the end of the day, it's an investment podcast. And with the private sale coming to an end, it's time to get back to business, which I'm sure everyone who didn't invest in it are like, thank God. Because, Frank, I'm sick of listening to this, and I was going to leave you, whatever. Getting back to business. Going to have an awesome podcast here with an awesome interview. And just a great guest. Someone who's come on this podcast. It was in October. I told you a little bit early who it is if you didn't hear. His name is Dennis Higgs, who is the largest shareholder in Nevada Exploration, symbols NGE. And this is a company that's using new technology to basically find elephant deposits in Nevada, where more than 330 million ounces have been produced. And to put this in perspective, you're talking about $430 billion in gold discovered in Nevada. So it's one of the biggest gold producing regions in the world. And for Dennis, as you'll hear, he's not just a brilliant guy, he's a really good guy. He took me on his plane. We flew over, beautiful mountains, Vancouver, where I got to know him a lot better. He explained the company to me, which I personally invested in, along with several of my Curzio venture investors who got into his private placement. And that was around 12, 13 cents, I believe. And the stock went as high as 40. And now it's pulled back, it's trading around 25, 27 cents. But so much has happened since then. So we've done well in this investment in terms of getting in early. Again, that was available. That's why for any investor who's coming in, you're going to have access to all this stuff now. Curzio Venture Opportunities and private placements. And not every private placement worked. This one has actually worked much, much better because some of them were in the mining industry. I don't have to tell you about the mining industry, how terrible it's been. But this is one of the ones that's working. And I have a feeling it's going to work out even better. I'm not looking to sell this. This is money I forgot about. I'm not going to sell this for a very long time. But I just want to be in front that I am an investor in this. But the latest news that's come out on this stock is pretty incredible. And Dennis is going to be here to explain it. Again, great guy. After you listen to this interview, you're going to know exactly why I'm an investor in this, why I want to hold this thing forever. And we'll get to that interview in a minute. Because later on, going to have a really, really, really cool educational segment. I know I say that a lot, but this one, guys, please listen to. Because it has to do with an email from a subscriber that respectively, criticized one of my recent recommendations. And I'm going to share the recommendation with you since we're up on it. And I want to teach you one of the biggest mistakes you can make as an investor. I see it time and time again. And you know how I know this is a big mistake? Because over my 25-year career, I've made this mistake several times. But trust me, if there's one educational segment you want to listen to this, because I'm going to break down this company, and people make this mistake all the time. It's common, it's simple, and it's going to make so much sense to you, and I promise you, it's going to increase your returns significantly over the short and long term, or prevent you from losing money in your investments. That's how good this segment's going to be. And before I get to that, let's bring in Dennis Higgs, someone that I truly believe this, guys, maybe one of those underrated resource investors I ever met in this industry. Let's get to that interview right now. Dennis Higgs, how's it going?
Hi, Frank. It's going well. Thank you.
Thanks so much for joining us on the podcast. So let's jump right in with Nevada exploration, because this is not your traditional junior mining company, is it?
Well, that's right. We've got a different technique for finding gold than what most people have been using in the past.
Now, explain that technique in simple forms, not from a geologist point of view, because we do have great investors here, but not everyone's a geologist. And it does get a little complicated, but it is unique. It's something that attracted me to actually invest in your company. But go over that technology, what you're using, because it is significant.
Sure. So, yeah, I'll give a little bit of background here. Very basically, let's talk about Nevada first. Nevada produces more gold per unit area than any other jurisdiction on the planet. Production through 2016 is over 200 million ounces. But the interesting thing about Nevada is that the deposits that have been discovered so far are usually in the mountains and the range fronts, where the geologists can see and project the faults, the structures, the rock types, and so on. But more than half of Nevada is covered by sand and gravel. So if we back up and go back 40 to 25 million years ago is when the gold deposits occurred in Nevada. Nevada was flat. And then you had the tectonic events that pulled Nevada apart and created the mountains and valleys and basins and so on that we have today. So with over 300 million ounces discovered in Nevada and over 200 million ounces produced so far, mostly in the mountains, it's postulated there's got to be another 200 or 300 million ounces in the valleys. And the question comes, how do you find this gold in the valleys? And the simple answer is groundwater. So water is a universal solvent, and as groundwater flows and interacts with the covered bedrock, it picks up a scent of whatever it encounters, whether it's gold, arsenic, antimony, and so on. So what Nevada Exploration has done, our little company, is we've taken over 6,000 samples, groundwater samples, around the basins of Nevada, and specifically in this area of the Carlin-type gold deposit areas up in north central Nevada, and in the basins looking for these scents to see if we can find, where we might have a gold deposit in the valleys under the sand and gravels that are not allowing us to see the bedrock. And we've done this in the area, of course, where we've got these very, very large gold deposits. And in fact, most recently, you've got Barrick and Newmont having their takeover battles about who's got the better deposits in Nevada, and the whole discussion and the whole debate is mainly about their deposits in Nevada. Anyway, so coming back to Nevada exploration, we've done this throughout the basins around the Cortez, Carlin-type gold deposit areas in Nevada, the trends, and have come up with some significant projects that have very strong gold in groundwater, arsenic, antimony, mercury, and so on, all the signatures, the pathfinder elements for these big deposits. And so now we have 3 projects in Nevada. I think that's when you first heard about the company about a year ago. Is that right?
Yeah, that's correct. And we heard about it because we were going to meet in Vancouver, and you said, you know what, Frank, instead of meeting at a bar, how about I take you on a plane ride? So, which you're a pilot, and you have a nice little plane that you took me up, and we went over Whistler, and it was great because, look, when you meet people, you can learn about companies. You can do it in a bar, you do it in lobbies sometimes. But when you're at hotels, you meet people, and I just thought that was really cool. And we basically talked about the whole company while we were flying the plane, which I think you let me fly for about a little bit. You wouldn't let me land it though, which is disappointing.
The 2 difficult parts, takeoff and landing. I think I did that part. That's right.
Yeah, and I don't think the people with my lifetime memberships want me landing in planes anytime soon. So now talk a little bit more about the water, because it seems like a simple process, but it really isn't, right? I mean, there's not a lot of companies doing this, and it's almost, when you're able to look at that water, it's basically telling you, hey, there could be something here. Explain that process a little bit more, because it's important. And I'm sure people will be like, well, we could use water samples. Couldn't anybody do that? But it's not necessarily the case, right?
Well, that's right. So this company, Nevada Exploration, has spent about 15 years now refining the process, getting the right equipment, and so on to do this procedure. And basically, what they're doing is they're pounding a hole down to about 100 to 200 feet down in the valleys of Nevada, picking up a groundwater sample, and then they have to stabilize the water immediately when they get it to surface, because gold and some of the other elements, they don't like to be in solution, so they might attach itself to the side of the vessel that the plastic or the glass that you're putting the sample in, and or the clays or whatever. So to make sure they can get a proper analysis, they have to stabilize the water, and then of course send it off to the lab for analysis. And we're talking about very, very low concentrations. It's parts per trillion. But if you think about a gold deposit, for example, we have two projects in Grass Valley area of Nevada, and the Grass Valley is due south of the Cortez trend, and in Nevada, you've got Pipeline is about 23 million ounces, Cortez Hills deposit is about 10 million ounces, Gold Rush is about 15 million ounces, and now a new discovery, 4 Mile, is just north of Gold Rush. Those main deposits are just at the north end of Grass Valley, and combined are over 50 million ounces. And you've got this great big valley, 500 square kilometers, called Grass Valley to the south. And how do you explore in that large area for these gold deposits? And so what we've done is we've done a very large sampling program, groundwater sampling. The Cortez Hills deposit, for example, is maybe 300 meters across, and it's 10 million ounces. So it's a very small area to start drilling and looking for a gold deposit when you can't see what the rocks look like under the sand and gravel. So in the groundwater sampling, these deposits, instead of being maybe 300 meters across, might be 900 or 1,000 meters across. So we can take a 500 square kilometer valley, take one sample every 1 square kilometer, and for about $500,000, it's about $1,000 a sample, take 500 samples. We've got two very strong golden groundwater anomalies, very, very strong, and arsenic and antimony and mercury and all the trace elements that go with one of these large Carlin-type gold deposits that we have at the north end of Grass Valley, and are able to now zero in on those two areas and start looking, doing more traditional type methods of exploration to determine what we might have under the surface. And in fact, we've gone now and started drilling one of our projects called South Grass Valley.
And I wanted to get into the projects because now, so you found a low-cost way to basically give you a footprint of possibility where the largest targets could be based on what you're finding through these water samples, right? And now, how did you put that word? So you're talking about your new projects, and get into that because everybody has, you see this in so many different industries that I cover, right? You have the new formula, you're going to do something, but at the end of the day, it sounds great. But now that you've put it to work, talk about, some of the results that you've seen very early on.
Sure. So we had these two targets, and we went focused on South Grass Valley. And the next thing we did was we did some traditional exploration techniques. We did some gravity geophysics, for example, that told us that the bedrock wasn't too deep below the sand and gravel. And then we did some airborne magnetics, which told us, they gave us a magnetic signature, which tells us the lower plate carbonates, which are the host rock for those large Carlin-type gold deposits at the north end of the valley, is lower plate carbonates. The magnetic low signature told us that there's an area just under the surface that looks like it might be this lower plate. So we went in and started drilling, and sure enough, we confirmed that bedrock was not too deep. We're hitting bedrock at about 150 to 160 meters in most of the holes. We found the correct host rock. That's the lower plate carbonates. So that's all very positive. And then what we need to see is some hydrothermal alteration, and that's the system, the method that the gold and other elements come up to the surface or get deposited and create these large gold deposits. So we managed to find these 7 out of 8 holes we've drilled so far have the hydrothermal alteration. And then these gold deposits, when the gold comes up, it comes up with these other elements. The gold gets deposited out first, and then the other elements travel farther out. And so they leave a footprint, a halo around the gold deposit, if you will. And so in our drilling, we're looking to see, of course, it would be nice to get lucky and actually hit a major gold discovery, hit right into the core of the deposit, and the first few holes would be wonderful. but that would be extremely lucky. That's not what's happened to us so far, but what we do have is the signature, this halo, this geochemical signature around these major gold deposits. In 7 out of 8 holes, we have that signature. So far, we have everything telling us that we have the potential for major discovery where we're drilling at South Grass Valley.
Yeah, which is incredible. And I want to get more to the personal issue here before we get back into your company, because, when I met you, it's just, you're a regular guy. You pulled up in this old Jeep. We had a nice, it's not a private jet that we were in. We were just like in a 4-seater, probably a 2-seater with me in it, right? So I think it fit 4 people. But, and you have an amazing track record, Dennis, of just, you've sold some of your companies. If I had to guess, you probably don't have to work anymore. Why specifically? Because even when you talked to me about this project, that was one of the things I noticed where I'm like, hey, you know what? This is a guy that really doesn't have to do this anymore. But I saw it in your eyes, like how passionate you are and how you believe this. And to me, it wasn't like, wow, this is a chance where I'm going to get rich. It was more like, hey, I want to kind of prove this because this thing could be massive. But I'm curious to know, what made you jump back into the game? I mean, is it the technology that you saw? Or is it, hey, you just had the itch and, I want to really get back in here? But the passion behind Nevada exploration, explain that, because that's something I'm really interested in.
Frank, I appreciate you commenting. You know what? It is really exciting. It's interesting. I'm reading the historian Kirk Kerkorian and The Gambler. It's called the book, his biography. It's very interesting reading, but it's one of those things where this kind of story is so exciting. It has such incredible upside potential, and then you look at the guys behind it. Wade Hodges, for example, he spent his career. He's discovered over 30 million ounces of gold in Nevada in his career. It's just about 10% of the gold ever discovered he's been involved in. But he quit all that when this theory first came out about groundwater and sampling and so on. And he quit all that, and he spent the last 15 years of his career building this technology, building this idea, building this process on hydrogeochemistry in Nevada. And he's passionate about it, and it is a very exciting opportunity, I felt, to get involved in something that will basically we'll have the treasure map for Nevada. If we can have one discovery, we'll have a bunch of discoveries, because we've taken the 6,000 samples that give us the background, the knowledge of Nevada, what the groundwater looks like. We have several other targets we can go in and zoom in on. But for me, it's personal gratification to help a guy like Wade, who spent the last 15 years basically bumbling along, struggling to make this work and prove his theory. And I believe it works. And it's very exciting. It's something that I think, well, I got to be careful how I say this. I don't want to sound too promotional, but it is extremely exciting, and it has potential to be. Here we've got a 20 or 30 cent stock that has potential to be a $20 or $30 stock with a discovery, and then it's repeatable. We can do it more than once. We have one discovery, we'll have several discoveries, and not just in Nevada, but potentially other parts of the world. Anyway, I'm getting ahead of myself.
No, I love it, because you're probably the least promotional person I know in the mining industry. So I kind of appreciate that, because it's not promotional where you guys own. I think it's the insiders, right? You guys own more than 35% of the company, if I'm correct.
Yes, we do. And my family is very, very big supporter of the company. Absolutely, myself and my family.
So 35% of the company. Now, let me ask you a question, and obviously, you can't disclose some of this, but are the majors kind of looking at what you're doing? And I'm only saying that because even like a guy like me, where we're trying to disrupt this industry, and as well as I do, we're going through our capital raise and everything, and you've given me great advice. One of the people I've turned to when I showed it, the white paper to you early, just to take a look, because, that's how much respect I have for you. And I know that even though we're a blip on the radar, our larger competitors are looking at us, and they know what we're doing right now. And, we're kind of like poking them, and they see it, and it's cool, because even they've reached out to me and stuff like that. So my question to you is, now that you're seeing this, you're publishing some of these samples, you're doing something new, are there majors actually, not to the point, obviously, you can't tell me they're investing in you, obviously, but friends in the industry, are they looking at you or saying, hey, what's going on? I'm just curious if they're catching on to this.
The simple answer is yes. There's several of the majors, several of the bigger companies, some of the mid-tier companies are also looking at us. There's companies that produce gold in other parts of the world but are not in Nevada. They want a foothold in Nevada, and they're keeping an eye on us. We've got a big conference next week in Toronto called the Prospectors and Developers Association of Canada, the PDAC, and we've got nonstop meetings while we're there with all these companies and so on everyone's keen to see what we're doing. And it's funny, one drill hole, we could be one drill hole away from major discovery, and of course that turns everybody's head. There's a lot of the interesting thing is it depends on who at the company you're talking to. If you're talking to a geologist, who's out in the field every day, some of them aren't convinced necessarily that this works, and then there's others that are absolutely convinced that it works, but they're scared to go to their head office or budget period and say, "Gee, I believe this works," but someone has to be the champion at the So it depends what you talk to. When we're talking to some of the senior people at these major firms, they get very excited when we tell them what we're doing. But we'll see. We've got a lot of meetings lined up. We've continued. They've been following us for the last couple of years, and every time we put out a news release, they're keen to hear what we're doing and what we've seen so far. Just an interesting comment. Got to be a little bit careful how I say this, but we've had a couple geologists from I want to say other companies active in Nevada who have seen our core and seen what we're doing, and they're absolutely astonished. They can't believe the success we've had so far in the holes we've drilled. The 8 holes so far we've drilled at South Grass Valley, and we're seeing the same kind of rocks that they see up at those major gold deposits up north at the north end of the valley. So definitely some excitement, lots of enthusiasm, and yes, they're all following us and keeping an eye on what we're doing.
Now, you have so much experience in this industry, decades, and you've been part of companies that have gone from early stage to production. So what are some of the risks, right? Because, when we hear about junior miners, we always hear, oh, this could be this, and this is why, but what are some of the risks? Because I know you're a guy that's always looking at risk, whether it's costs, whether it's, say that this terrible bear market continues for another 3, 4, 5 years. But what are some of the risks to investors here or things that maybe worry you a little bit if things don't work out?
Sure. So specifically with Nevada exploration, the biggest risk we have right now is that, there might not be a gold deposit there. We've got all the indications that there is one. And in fact, our geologists, Wade and Ken and so on site, both tell us that they've never seen this many clues in this part of Nevada where there was not a gold deposit. So, but having said that, yes, there's a chance, number one, that there is not a gold deposit there. Or the other risk is that you run out of money before you find it. The finances and financial risks and so on, those are always the risks outstanding. Having said that, the very next hole could be the discovery hole and changes everything overnight. And of course, your financing then is not a problem. So, but those are some of the biggest risks. And then beyond that, once you've got a discovery, in our case, let's assume we had a Cortez Hills type discovery, 10 million ounces and so on. Well, that's a multi-billion-dollar prize, and you wouldn't have too much trouble financing it. But what more likely would happen at that point is that you'd have a takeover bid, because Nevada is one of the best areas, one of the best jurisdictions in the world for producing gold, if you consider all the factors, including political and so on. But so for our company, the production risk would probably not be an issue, but that is definitely an issue. You've got permitting, and then you've got years of permitting, and that has to take place, and you've got all the issues that go with whether or not it's a good deposit, and whether the grade is going to make it, and whether the process is going to be able to effectively beneficiate the product, the gold or precious metals and so on. So there's lots of risks, but for Nevada exploration, our little company, the biggest risk is, of course, always finances and whether or not you have that discovery before you run out of money, or whether or not the deposit is actually there. And I can't tell you there is a deposit there, like I say, but boy, we've sure got all the indications of something there. So that's what makes it interesting.
Yeah, and that's why you need people with experience running some of these junior miners. Sometimes you get younger kids who are ambitious, but they've never run companies before, and sometimes they get too aggressive, and then you run out of money, and the next thing you got to do financing much lower, and you give away warrants and stuff like it's crazy, 5-year warrants. I mean, yeah, that's why it's important when we always say, who's running the company, who's the management team, and things like that. And you guys definitely have a very good one here. Now, if there's people listen to this and say, you know what, that Dennis Higgs guy, he sounds pretty cool, and I like him, and this is a great story, and they invest. What do they have to look forward to over, say, the next 3 months, 6 months, 9 months, and some of the things that you're doing going forward?
Sure. So what we've got going on right now, we've got actually I'm expecting to have a technical advisor join our advisory board. That's going to be very important for us, and he's a fellow very knowledgeable in Nevada. I'm hoping that that's going to happen. But the most recent thing we've announced outside of our drill results is that we have an analysis. We've done some mercury sampling, and as it turns out, we talked about the pathfinder elements creating a halo around these big gold deposits, and mercury is one of those elements that comes up with the gold. But the interesting thing about mercury is that it's volatile. As you may know, it's a metallic metal or a metallic element, but it's liquid at room temperature, and then it also turns to a vapor quite readily. So mercury, when it becomes a vapor in, for example, the bedrock below a valley like we're talking about where we're working, it comes up vertically. And so most recently we've got these mercury results that are telling us that we have the signature, we know what the signature looks like for Cortez Hills, and the mercury outlines the Cortez Hills deposit almost exactly. And we have the very similar signature, mercury signature on our property, but just slightly north of where we've already been drilling. So if we believe we're currently drilling into the footprint of one of these deposits, we've just been, when you drill holes in Nevada, of course, you have to permit the holes before you start drilling. We just made an application to permit these holes to the north where we're getting this extremely strong mercury anomaly. And so I think next phase for us will be to go up and test that new area. Well, it's not really a new area. It's a continuation of where we've already been drilling, but it's a little bit more north, and see if it's giving us, we've got a signature that outlines almost exactly or very similar to what the Cortez Hills deposit looks like, the mercury anomaly there. So next for us will be to go up and drill those holes where we've got that mercury signature and see if that's getting us closer to deposit. But also we have to analyze the drill holes we've already got. We've already done the 8 holes, and through some pathfinder elements and so on, the footprint I mentioned, we can do some vectoring towards where this gold deposit might be, and with the information in 8 holes we have so far. So there's lots of things we have to do yet, and but again, the most exciting thing, of course, is drilling.
No, that does sound exciting, and even with the 8 holes that you drill, right, especially for a new company, it's kind of amazing so far with the results, right? And I'm not talking this up, but I've seen this process with so many other companies, but it just, when you guys are drilling, it seems like so far almost everything that you guys have drilled has been pretty spot on, right?
It's actually been fantastic, and like I say, some people who are active in Nevada are shocked that we've gone into the middle of this valley, middle of nowhere, where we have no information other than a groundwater anomaly, and started drilling. 7 of the 8 holes have so far intersected what we call the favorable lower plate carbonate host rocks, which are the host rocks for those giant gold deposits at the north end of the valley. They're exhibiting intense hydrothermal alteration, which is, of course, what brings the gold into those right host rocks. And they contain significant concentrations of what we call Carlin-type gold deposit pathfinder elements, including gold. Those other pathfinder elements are mercury, arsenic, antimony, and thallium, and we've got all that in very thick intervals, greater than 200 meters, thicker than say 600 feet. So we definitely have a new Carlin-type hydrothermal system with thick intervals of enriched gold and supporting pathfinder elements over a very long strike length. So that's very exciting. It bodes well for potential discovery here.
No, and I want to finish off with this because, you're a macro guy. You look at the total market in terms of gold and where we are and interest rates and things like that. And you have a realistic outlook where I think over the past, I've been in this industry for a while now, but it's always optimistic, right? Oh, gold's great. We have lower interest rate. We have higher interest. I don't know if it's inflation, deflation. When I talk to everybody, everything's supposed to move gold higher. Nothing has really. The price of gold actually hasn't been too bad. It's just most of the stocks have really been, terrible performers. So let me ask you about the industry, which I'm sure a lot of my listeners want to know, and someone who's kind of like an insider in it is, what do you think about all these major acquisitions? We have Newmont trying to buy Goldcorp. Now Barrick saying, hey, we have a better deal. Let's merge with Newmont. And, Yeah, is that a good thing that a lot of these guys are merging? Because when it's a merge, they say they're going to sell off some of these assets, but these are the guys who buy the junior miners if they're really good projects. We know that they, the CapEx spending has dropped off like a cliff for these guys, right? Because they're more, just fixing their balance sheet. They were highly leveraged. So when I see these companies and they're merging, do you think it's a good sign, or is it a bad sign where, a lot of the buyouts are going to come from them, but yet it seems like they're focusing on just, hey, let's just merge these companies together. And that integration process usually takes a year or two. It's not simple, even if you do have overlapping, assets and things like that.
Well, it's very interesting. And it's a good comment, good question. You see this type of merger acquisition activity and so on go on at the top of markets, and you see it go on at the bottom of markets. Right now, I'd say, of course, we're at probably a bottom of a gold market, and you're seeing everything scrambling. Barrick, for example, spent years trying to fix their balance sheet after making a rather unfortunate acquisition, a multi-billion-dollar acquisition, and then ended up writing off a major portion of that. So some of these companies have gone through a tough period and are now fighting to get their balance sheet back in order, which they've done, and now scrambling to make themselves bigger and stronger. From a personal bias with Nevada exploration, I don't like to see, Barrick and, well, let me say this, Barrick and Newmont, the biggest part of the battle is over their assets in Nevada. Those are the best assets in both companies. And funny enough, we're in the middle of some of their projects. 3 of our projects are all within 30 miles, say, of in one case, 70 million ounces, in another case, 50 million ounces, in both companies, Barrick and Newmont. So from a personal Nevada exploration bias, we prefer not to see Barrick and Newmont merge, where suddenly we've lost some competition. If we have a discovery, we'd like to have one of those companies be fighting each other to bid for control of our company. Of course, that's the best result for any, as a takeover bid for our shareholders. But the reality is, if you've got a big Barrick-Newmont merger going on, that will create a very, very large gold company. And the question comes whether that's good for the industry at all. Barrick's completed its takeover of Rand Gold. You've got Newmont that's made a bid for Goldcorp, a friendly bid. How this is all going to play out, I don't know. But my personal bias is, I, of course, would prefer that the competition didn't disappear. But we'll see how that plays out.
See, I love that. And you're going to give an honest answer, because most people, that's great for the industry. That's awesome. You're like, I'd rather have 2 guys over there bidding for us compared to just one big one. But hey, if you have a major discovery, I'm sure it's going to be much more than those 2 companies that may look to come in and make an offer for you guys. But I guess we'll end with this, Dennis. When's the next plane ride, and how many plane rides do I have to take before I can land your plane?
You know what, Frank, you're welcome to go for a plane ride with me anytime. We had a lot of fun, and in fact, we got talking, and like you say, we talked about the company and so on, and had a great time flying around. You know what I might do is sometime this summer I might take a plane down to Nevada, and if you want to fly over and meet us there, we'd love to show you the state from the air. It'd be a lot of fun, and you can see these giant open pits and deposits and so on. But anyway, whenever you're in Vancouver, you're free for a ride, and of course, if we can arrange to be in Nevada together, then we'll fly around the big deposits in the Carlin area of Nevada.
Nah, it sounds like a plan. Well, listen, good luck with everything and how hard you're working. I really appreciate you taking the time to come on our podcast. And I'll talk to you soon. I know update all the investors and my audience pretty soon. So really great stuff. Appreciate you coming on, buddy.
Thanks ever so much.
All right, take care, Dennis. Bye. All right, guys, great stuff from Dennis. And Dennis approached me about the situation. He was straight up about it. He told me he says, Frank, look, I mean, this technology is amazing. It's a tiny company. We're going to need to raise cash, which they already did, which is, how I got into private placement. And he truly believes in this technology. I mean, so much that he's one of the largest shareholders in the company. I think he should participate. I know in the last 2, every capital raise round. So he goes, look, Frank, if I'm right, you're looking at 100x gains, because it's not just one discovery. It could be many discoveries, as you saw. And he goes, if I'm wrong, then the stock's going to fall. So, put a little money in it and that you could afford to lose. Exactly how he pitched it. But I love that pitch compared to so many other pitches that you get in this industry. We're right next to the Barrick's largest mine. We're great. We're awesome. We're going to, you heard him explain both the positives and the negatives, right? The reward, the potential reward, and also the risks. And I have to tell you guys, in this industry where I see so many people drive these beautiful cars, and again, it's a depressed market, it's coming down, right? It's been horrible for a while. And these beautiful dinners, and it's how much money these guys make and flaunt it. When Dennis picked me up, he picked me up in like an old Jeep with mud all over it. The plane, it's a nice plane. It's like 20 years old. It's a 4-seat. Like I said, I was joking around. It's like a 2-seater with me in it because I'm kind of like a wide guy, and just a regular guy that doesn't really need to do this. And that says a lot for me, right? It's more than the fundamentals. It's more than the technology, but it says, why is this guy doing it? Because so many people, when they have brilliant ideas, are like, man, I want to do this and I want to be rich. I'm not building Curzio Research because I want to be rich. I want to build it because it's the right thing to do. I think my shareholders are going to do very, very well. If we're successful, again, it would be very successful for me and my partners and things like that. But I didn't create this company to say, oh, let's do this way we can make so much money. And when I see people like this, when they look at things and just say, this is something that works and this could be massive, I think he's doing it more. It's just his whole soul is involved in this, which is something that I really like. And that matters. That sounds funny to you, but that matters to me. When I meet managers, when I meet kids, when I meet people who are starting their own companies, you want the passion behind it. But with Dennis, he's just a regular guy, very, very successful. You'd never know how successful he was just if you met him off the street. And he's very upfront. He's very honest. And that's, says a lot to me. But for this, when I look at this stock and I'm looking at your investors, I would tell you, put a little money in the stock. Money that you wouldn't even know if you lost, because that could be a few $100s if you're a millennial and just starting to build your retirement nest egg, whatever, or maybe a few $1,000s, whatever it is. But try to get exposure to this stock because they just came out with great drilling results, great news, and the stock is probably about 17% off its highs and trading below 30 cents. The reason why it wasn't because people dissected the news is because that's what happens in terrible, bear, depressed markets. When you report good news, it creates a liquidity event when more investors are like, oh, wow, let's get in. And then you have these people dumping it because they've gotten killed in so many of their other positions in this industry. Again, this is symbols NGE trades in Canada. So, this market has been horrible, but we've seen that time and time again where I've had people that I know with good projects that have drilled that send me, Frank, did you see these results? And I can almost guarantee they'll tell me the night, the press release went after the close, they'll tell me that night, hey, did you see the press release? And then I know that stock is actually going to go down, and they'll go down 10, 15% because it creates a liquidity event for so many people to get out. There's still a lot of redemptions going on, but the fact they're reporting good results and you can get it 17% less than what it was just a few days ago, it's a pretty good buying opportunity, I think. But I'm going to tell you, out of the thousands or so companies I research in the resource industry, all the analysts I know and put in front of you on this podcast, all the CEOs, management teams, again, I had the pleasure to meet, I spent time with. If you held a gun to my head and asked me, based on risk reward, what is the one resource stock you would buy right now, Frank? If somebody asked me that with a chance to make an absolute fortune, it would be Nevada Exploration. It's a company that, hey, just remember, just money that you could afford to lose, and don't go crazy. And don't take a massive position in the thing because you're excited. It's a risky stock, which Dennis, again, he told you about, and there are risks. But if they're right, this is going to go up higher than any single junior miner stock that you've ever invested in. And I like that risk reward. I mean, that's why you're in junior miners, right? You're in for the big score. You're not in, hey, let me make 20%, let me make 40%. No, that's not what you're in there for. You're in there for, if it works out, you're going to quadruple your money or more. You're going to 5X, 10X returns. And some junior miners that I see aren't going to offer those returns, even if things go good for them. So I'm risking a lot, which 2 years ago, you could say I'm risking 75%, which is how much some of these things are down. So you want to make sure always that reward is worth the risk that you're taking. With this, I think it's worth by a mile. So that's why I'm investing. I'm not selling it anytime soon. I'm a believer, but it's just something I want to put in front of you. And that's my motivation, guys, to make you money, because seeing this process of raising money through Curzio Equity Owners and our token, and seeing how small our list is compared to everybody else, and the fact we can raise $3 million in 8 trading days just shows that we're doing something right, that a lot of people trust us. And I know when you do the right thing for people, it always comes back tenfold. It really does. And I'm going to give you a quick example. I'm going to go off just really quick because this is worth it. Because after Stansberry, I went to Weiss, and Weiss didn't work out. And I created this product for Weiss that was $5,000. We get access to all my service. And let's just say they didn't do the right thing, and they pissed me off. So I wound up leaving. Now, we had about 20 people, because that's when I realized they weren't going to do the right thing, and I cut it off. It's like 20 people that subscribed to that around. Maybe I think it was more like 30, and got all my services. So when I started right after that, I started Curzio Research, and those people came back to me and said, well, Frank, I just paid all this money for your research. And I discussed with my partner. I said, you know what, guys, I even though that money didn't go to me, it went to Weiss. I said, we have to do the right thing here, and we have to, comp these guys and give them a free subscription to all of our products when we start. And I did that, right? And those are guys that would have paid even more money, but, we figured we'd do the right thing. And we had 2 people call that turned out to be 2 of, I know one of them is, I think the other one invested a good amount. The other one turned out to be one of the biggest investors. And I spoke to him on the phone, and he actually told me that story. Because I said, you know what, you do the right thing with people. And he's like, yeah, because you did the right thing with me. I'm just trying to tell you, it comes back tenfold as someone who's been doing this for a long time. I mean, you help people without asking anything in return, and you never know where it's going to go. And those people tend to be there for you at all times. So for me, when I'm recommending a stock like this, for people who are skeptics out there, like, Frank, you own it. What are you trying to? No, it's that if this thing makes you money, you're going to be part of my brand for life. And that's the reason why when I see companies like this, it's worth it. Is it risky? Absolutely. If the mining industry keeps going crazy, absolutely. That's why I say just put a couple $1,000s in it, because that $1,000 could be $50,000, $100,000. That's the opportunity that this stock has. And I can't say that for a lot of other junior miners. And I really like Dennis, and he's going to do everything to see this through. And the fact that he's just about the biggest shareholder and insiders own 35%, he's not just talking out as you know what. And so I wanted to present that company in front of you. But let me know what you thought. All right. This podcast is about you, not about me. Frank@CurzioResearch.com. Just feel free to email me at frank@CurzioResearch.com. Now, let's get to my educational segment. I like to tell you it's awesome. I'm going to let you decide. So I got an interesting email last month, and it's from John. He's a subscriber. Because, Frank, I have to admit, I did read your recent CVO report because I scrolled down and saw a very old name, 5 Prime. That's 5 Prime Therapeutics. Because they're a brilliant marketing company who acts like they don't need big pharma because they think they can develop their own hits. GSK, like Glaxo, blew a ton of money with nothing to show for it. Look at GSK over 20 years and tell me why you would reference that. They've wasted talent and opportunity time and time again. Good luck on this one. If it doubles, cut full exposure. They're a trading name only, no chance of real growth. Because I've enjoyed your podcast and I wish I could buy you a token. But basically, he says, I'm not a credit investor right now. Good luck. Keep up the good work, John. And John's a very good guy. And I love emails like this, as he explained it to me. When I look at a company like this, okay, guys, I'm going to take a stab here. I'm pretty sure John owned this in the past, and he lost money on it, if I have to guess for that. I could be totally wrong, if I had to guess. But for you to be that emotional saying, you better take profits on this, I'm pretty sure that, John probably owned this and unfortunately lost money in it. And that's fine because we've all been there. But when you look at a stock and you lost money on it, it's very difficult, right? Because you're going to be biased, right? You're going to hate everything about it. But in the end, it's a stock. It's an investment. It's not personal. But I always say, look, don't hate the company. Hate the stock price or where it's trading. Because when you look at a company like this, and I answered a question, right? I'm going to bring this up. And even though, again, I hate bringing it up, but you guys know how much conviction I had in GE, and I thought it'd be very good. And then somebody asked me a question the other day when it was around 750, I believe around 758, maybe 3 or 4 weeks ago on the Frankly Speaking podcast. And I said, you know what? Maybe I'm the last guy that you should be listening to about GE because I was wrong on it. I had conviction in it. But I said right now, man, it just makes sense with the assets. You have a guy in there. I covered the whole sectors and said the whole every single sector of their business and said, look, when you bring in somebody new, it's 10 times better than having someone who's part of your business and your culture because they watch their families go up. They go to company picnics. They do all this stuff. We have a new guy. He's just looking at numbers, right? The new CEO and saying, this has got to go. This is gone. This is gone. It's not personal. And you're seeing it already. And GE went up, right? Because for me, I made that mistake before where I would have been like, I'm not commenting on GE. I'm wrong. But when I looked at it from that price, I tried to take a fresh perspective and give you, that advice. And GE is up since then. It's up pretty nice since I did that segment. My point here is when I look at 5 Prime, and I'll give this example even with John. When you look at 5 Prime, it's a company that was $45 a share in 2015. Had a promising pipeline. It still does immunotherapy drugs, right? That's a new way to help cure cancer, which basically strengthens your immune system to fight off cancer. and has a great management team, decades of experience in oncology and immunotherapy right now. I'm looking at Leerink. If you never heard of Leerink, guys, they're the best biotech sell-side firm by a mile. They were saying the same thing about 5 Prime, has one of the most compelling early-stage pipelines in their coverage universe for 5 clinical candidates, they were saying, that are either in first class, only in class, or possible best in class. So that's how good their pipeline is, right? The biggest immunotherapy players, Roche, Bristol Myers, Glaxo, partnered with 5 Prime to help develop their amazing pipeline of drugs. In fact, these companies are actually testing 5 Prime drugs alongside their own FDA-approved immunotherapy drugs, which is really cool. Not only that, these drugs are targeting the biggest cancer markets, right? The ones that we need the most help with, the massive markets that people that just, there's smaller cancer markets and there's big in terms of, talking about from a company point of view in terms of revenue generating. Pancreatic, gastric, ovarian, breast, bladder, melanoma, that's what they're targeting. Now, this has basically been the story for 5 Prime, at $45, at $35, at $25. Again, it's $45 probably 2017, a little more than 18 months ago. Over this time, the CFO left, which I think was a great thing. He left a while ago. I think early 2018, because he was replaced by a superstar. His name is David Smith, 20 years of experience. He was CEO of Intergen X, which got acquired by Thermo Fisher. He also worked at numerous leadership roles at Genentech. This guy's a big shot. They brought him in. Again, I'm looking at this company from fresh eyes. The company also reported weaker than expected results on its signature immunotherapy drug. This is why the stock came down a lot. But here's the key. For me, when I saw the stock come down and looked at it, again, from a fresh perspective, I started looking at the data, and the data was actually much better than what the market was suggesting. I'm not going to get too technical here, but when I looked at their treatment, it worked for 4 of the 31 patients, and they were expecting more. But 87% of those patients were already heavily treated with other forms of medicine. Okay, so that's going to skew the results. You always compare your trials to other companies that have trials of similar drugs. And in their trial, which was a similar drug, only 33% of those patients were heavily treated with other drugs. So one of their competitors' study looked like it came out better than theirs. So if you look at the data as a whole, and guys, I'm not reaching here. So this isn't something like, oh, Frank, it's a little bit thin. No. My thesis was validated because they're going to continue to test this. Bristol Myers is putting up most of the money for these trials they partner with, and they are ramping up spending to advance these trials. That's confirmation that says, hey, you know what? This is real. We're believing in this. Don't worry about that data. So the stock fell from 45, probably like 20, 15, whatever. So we have a company that completely crashed for a reason I think was totally overblown. And now it's down 75% from its highs, which doesn't mean anything. It could keep falling, right? You got 95%. When a stock is crashing, you don't want to try to catch a falling knife. How do you avoid that? You start looking at the fundamentals, because eventually fundamentals are going to kick in. When you have the ICO market, there's no fundamentals. You're not getting equity stakes, so those things are going to keep falling and eventually go to zero. That's not the case when you have equity stakes and things like that, and you have companies that have good balance sheets. And when you look at 5 Prime, they're sitting on $320 million in net cash on its balance sheet. And guys, for CVO, I'm giving this away because we're up on this stock now, even though we recommended a couple months ago, up over 15% on it. They have $320 million in net cash on its balance sheet. That's over $9 a share in cash. This stock fell to $10. So we were able to get in just above $10, right? So John, I hear you say all these risks and everything, but this, when I'm looking for a perspective, the price makes sense right now. So we have a company with little downside, in my opinion, because if it fell 15% from the price I recommended it, it's closer to $12 now. It would trade below the net cash on its balance sheet. That would assume every one of its drugs in its pipeline are worthless. And again, that money is going to continue to go down because they're pushing this through trials. But if they want to say, hey, no more trials, no more nothing, I mean, they have enough cash that their net cash is worth more than the market cap of the company, and basically you're getting the pipeline for free. The upside for this stock right now could be $35, $45. That's what it was trading when people thought that they have a great pipeline. But this particular drug, when it had just bad news, that's when the thing really came down from 45. So I saw when it was 35, 45, this company could get to that level. Or, over $1 billion market cap again, if this happens to be okay. And I see this happen time and time again in the biotech industry. People leave immediately without looking at the data. But sometimes that data, they're just like, hey, wasn't that good? And we just want to see it be a little bit more safer, or, let's see result. And they'll push it. The stock's going to completely crash, and then they're going to come to the market. If that data meets those estimates that the market's expecting, that thing's going to roar higher and go up tremendously. So again, when I'm saying don't hate the company, hate where it's trading, because if it falls 50%, a lot of the reasons why you hate it are probably priced into the stock, right? And it may become a screaming buy because your emotions are so involved in this. Like, man, I just hate it. These guys are terrible. Yeah, and you brought up a point and said, why would I reference Glaxo? I mean, you look at Glaxo and look what they did or whatever. I mean, you're right, because they have a massive cash hoard to supply this. And maybe they haven't made good investments in the past, but the fact they're backing this and they have a strong balance sheet and they have billions, they could support this thing. I mean, you're looking at a market cap company of $100 billion compared to this, which is a few $100 million. That's very important. That's significant. I don't care what Glaxo made in the past. I know that they're going to put money behind this, and maybe this is the one they hit on, maybe not. But having them is much better than not having them, right? I think you would agree with. But you have to be careful here, and here's the lesson, guys. For example, if you have a company like Tesla, there are people out there, man, just go on Twitter. They hate Tesla. They hate Elon Musk. And to be honest with you, I get it. The whole SEC thing, I get it. I understand it. But if the government came out with, say, some crazy thing, for example, I'm going out there with this, and they mandate that everyone in America, if they're going to buy an electric car, their first electric car, it has to be a Tesla. Say if the government came out and said that, right? Which is amazing. It'll never ever happen. I'm just saying, I'm using an example of an extreme here. I know analysts that hate that stock so much that would even after that news came out, they'll still tell you to short the stock because their emotions are involved, and then they become very stubborn. Similar to what you see with the end of the world, guys. The dollar's going to crash, riots in the street, America's dead, the market's going to come down 60%. Go back for the last 10 years. It's a joke. Gold's going to reign. It's going to be, that's it. It's going to rule the world. Buy as much gold as possible. It's been the worst investment by far over the past 10 years. Right? And basically, I've been hearing this argument for 35 years. 35 years. In the meantime, the S&P 500 is up like what? Whatever. 10,000%, whatever it's up over the past 35 years. But the lesson here is don't be stubborn. I mean, if you don't like the company or whatever, you just be careful. Like, just don't like where the stock is trading. Or if you hate it that much, come up with a price where you think you may buy it. That's a good idea. Because I tell you, if I ask analysts who hate Tesla, and I said, hey, what price would you buy the stock? I know a lot of them are going to say, even if it was 60% lower, they're like, never, no price. And if they say that, without being willing to look at any of the facts or anything that changed in the macro and the company and the markets, you better find a new analyst to listen to, because that guy is going to destroy you. And that's what we see in this market, where people have a thesis, where after the credit crisis, they're like, oh, this is terrible. Look how much money you're bailing out taxpayers, whatever. And that's why I always bring up David Tepper. He came back, took a step back and said, you know what? They're backstopping everything, the government. Put your emotions aside. And he goes, you know what's going to go up? Everything's going to go up. Because they're giving basically money to free money for you to buy a house, free money for you to buy a car, and they're backstopping everything. But then you still have analysts not looking at anything, not looking at we're going to have the lowest interest rate environment in history of our country. That's going to stimulate growth somehow. Maybe it comes from other places, maybe it doesn't, maybe it wasn't as strong. However, you have it's like a building about to fall over, and all of a sudden you got all these people like pushing it up, and they're pushing it up, but nobody's looking at that. Everyone's just looking at the past and saying, wow, this is terrible, and I hate Tesla, and Tesla's not going to. I'm using it as an example. But if you hate a company so much, there should be a price or a level that you should buy it. Don't be stubborn where when we hear from the perma bears out there, guys, we hear them, oh, the market's going to crash 70%. If it crashes 70%, you know what they're going to say? It's going to crash another 70 to 80%. Those are guys you don't want to listen to because it's like a religion to them. They're not looking at things that change, and the markets change every day. They change every week. They change every month. The conditions change. We're analyzing data, whether it's housing, whether it's economic data, to see when a recession is coming up. All this data, everything that comes in, when you see a tax reform that changes the landscape of things, that pushes out anyone who thought it was going to be a bear market, it should have been pushed out further. Because you're looking at earnings growth that was supposed to be 10, 11%, that went to 22, 23%. And if you're not looking at that and paying attention and say, oh, it doesn't matter, the stock's still going to crash. If people are telling you that, find a new analyst to listen to, because that guy is going to destroy your portfolio. Trust me. I've seen it happen time and time again. Be willing to change with the markets. And if you do not like a stock, it should be the reason because of the price it's trading at. It doesn't make sense. Okay, not because, if Glaxo, I hate Glaxo, 5 Prime Therapeutics, it's terrible, it's horrible. You're 45, 35, 25 at $10 with over $9 a share in cash and a lot of catalysts. Maybe I'm wrong on this one. Maybe I'm wrong. For me, it's worth buying that stock, having a 30, 35% stop on it, because if it hits that, it's going to be trading below cash. But I know if things go right, that thing's going to 35, 45. That's a good risk reward for me. I like 5 Prime because of the price it's trading at. So don't hate the stock. Don't hate everything else. They do have a new management team. That's the reason why. But I see that mistake made a lot, and I've made a lot in the past, over my past 25 years. Not a lot, but I've made it a few times. I finally learned from it, saying, I hate this stock. This is terrible. And I didn't really take a step back and look at it. When it did come down, it turned out to be a great buying opportunity. And the reasons why I hated it didn't even exist anymore. And I totally ignored it because I was just stubborn. So don't be stubborn. It's just a stock. It's an investment. They don't care about you. The stocks aren't looking at you and saying, wow, you're an ugly person. You're a pretty person. No, it's emotional. Try to take the emotions out as much as you can, even though that's difficult. Man, got to do that pretty quick. Okay, guys, once again, private sale of Curzio Equity Owners. It's going to end on Thursday. That means I'm going to open it up to our entire network. I'm meeting a lot of people in hedge funds, investment funds, crypto funds, family offices. But after Thursday, it is going to go out to everybody. So if you are thinking about coming in, just try to do it. Just send me an email. If not, it's perfectly fine. I understand you have to be an accredited investor, and the minimum is $25,000. But we're really excited on our way. We're launching this thing, and if you want to learn anything about the token, anything more, just go to www.curzioequityowners.com. And if you read everything, the white paper and stuff like that, and you still have questions and you're serious about investing, send us over an email. I talk to so many people personally. I have no problem doing that. Again, you're investing in my company. It's the least I could do is get on the phone with you. But again, that's CurzioEquityOwners.com, and the private sale ends on Thursday. So guys, thanks so much for listening. Really, truly appreciate all your support. Looking forward to building this company with you guys where we're all sharing the success. And I'll see you guys in 7 days. Take care.
The information presented on Wall Street Unplugged is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility. Wall Street Unplugged, produced by the Choose Yourself Podcast Network, the leader in podcasts produced to help you choose yourself.